Did you change jobs, or did you just get the results on your tax return and see that you owed money and need to change your W-4, but you just don't know how? Stay tuned and I'm going to walk you through it step by step. Welcome back, everybody. And so this is a really common question that we get is how do I fill out my W-4? And especially if you're married or you have two jobs. It's one of the most common mistakes I see. And the reason is that whenever you're doing your W-4, the payroll charts are designed for you by yourself. And so if you make $100,000 and you're married and you have two kids and you fill out your W-4, it's going to calculate it like that. But then if your spouse also makes $100,000 or any number, it doesn't really matter, the charts don't know what your spouse is making. And so what happens is it assumes that you're making all the money for the family. And that's why if you're watching this video and you wonder why you owe, that's what's going on. So now let's go ahead and show you how to fix that. And hopefully this is very helpful to you. So to start with, one of the best tools I've found really has just been the IRS's calculator itself. So let's just go in here and type in W-4 calculator. I'm just going to walk you through this step by step so that hopefully you can do this yourself and maybe save some pain next year on your tax return. So there it is, the tax withholding estimator. If you do this right, this thing is incredibly accurate. So then we're going to click here, use the tax withholding estimator. Once again, on the IRS's website, this is free. You shouldn't have to pay for this. And here we are. So really it's 6 steps. It's not that bad, and I'm going to go through it with you start to finish. So for purposes of this, I'm going to do it as a married filing jointly. But it's the same process for single, head of household, or whatever. But in this case, we're married filing joint, and then we just follow the clicks. Do you or does your spouse have a job or a pension that regularly withholds taxes? Yes. In other words, they take out federal tax from your paycheck. I plan to claim the dependent, so let's go ahead and say we do. But if you don't have any children that you're claiming, then obviously this would be no. Same thing if you're over 65, but I'm going to try to do the one that's going to be the most likely for everybody and make adjustments as necessary for yours. All right, so here's where we get into it. How many jobs? So this isn't asking when we do married how many jobs you had. We're talking about for the entire couple, you and your spouse. So if you had one job and your spouse had one job, that's 2. If you had 2 jobs and your spouse had one job, that's 3. In our example here, I'm going to do 2, one job for each spouse. And in this case, both of them I have set up here are salary positions. So we'll go ahead and do salary. And it's going to ask, is this for yourself or your spouse? We'll go ahead and do ourself first, but then we'll do a second one for our spouse. When did you earn the income? We're going to say all year. Once again, modify these for yourself, but it's pretty self-explanatory. And I'm going to go ahead and do every 2 weeks because that tends to be the normal for most people anymore, is every 2 weeks. I know there are variations, but that's what most people get anymore. And when did your most recent pay period end? Now this is where you're going to need to have pulled a pay stub for you and your spouse, or if it's just you, for you, and for however many jobs you have. You're going to want your latest pay stub. Don't worry if they're a week apart. This is going to get you what you need to know. So in my case, my last pay stub actually got paid on the 15th, so March 15 of 2024. And, actually, sorry, that was my pay date. My pay period ending actually ended the week before. So I got paid on the 15th, but it ended on the 10th. And my pay date is March 15th. Enter the wages or salary per pay period. So look at your pay stub. In my case, the salary was 3048. Don't worry about decimals. And year to date, just look at your pay stub, 19815. And then it's calculating, based on this, do you expect your income to be $80,775? That is correct, so we're good there. And federal taxes paid, once again, this is all off the pay stub. For this period, so that's what did I just have withheld? For me, it's 427. And year to date, 2781. I do contribute to a 401k, so we'll go ahead and do that. My 401k per pay period is $161, and year to date I'm $1,050. And on this one I did not contribute to health insurance, so nothing there. And now you can see it's asking, all right, what about your second job? So here we go, second job, also salary. This one is for my spouse, and she also worked all year, and she also gets paid every 2 weeks. Most recent pay stub for her was actually on the 8th. We're off a cycle. Clearly I'm making this all up just for you to follow along, but I want you to see it's different, and that's okay. And that my pay period ended on the 3rd. Same exact thing. So for that one, wages for the pay period are 3,668, and year to date is 24,594. Yep, my spouse is going to make 100,000. Good for her. That's a keeper. Federal taxes paid per period. Okay, so once again, right off of the check stub, and in my case, 455. So 455, and my year to date was 3112. My spouse also contributes to a 401k, once again, right off of our check stub. And so that is per pay period 276, and year to date 1799. Okay, now she actually contributes to a health plan, and so she does do that, and her pay per period is, so she's having 149 per pay period, and year to date is 450. 447. In your case, you should be able to get this straight off of your paycheck. That takes care of all of that. To make life simple, we're going to ignore other sources of income, so no self-employment income, because that's generally not what people are dealing with. Other sources of income, so if you did have retirement distribution, there's going to be withheld, or if you were making estimated tax payments. But the idea here is we're hoping to not have to make estimated payments and get this thing close to where we want it. So that's our income. So next, that's really the hardest part, adjustments to income. In this case, let's see, not teachers, not contributing to IRA because we're doing a 401k, but we did actually have $250 of student loan interest that we paid this year. So we're going to go ahead and get that. And next. And so a lot of these things, you can just look at your last year's tax return and see any of these items. For the most part, it's pretty straightforward. Now, as far as standard or itemized deductions, I'm going to go with standard. Just use the standard deduction. And even if you itemize, unless it's a lot, I'm just going to recommend you do this because it gives us a little cushion. And really, I mean, look at that. Standard deduction, $29,000. Most people just don't have enough. If you do, you can go ahead and add that in there. But for simplicity, we're just going to take standard deduction because that covers most people. And now we're on to tax credits. How old will you be? Well, we're going to say 50 for me, and then did really well, and spouse called herself a younger man, so she's 55. Child tax credit. Enter the age the child will be. This is just put it in like it is. So if your child will be 15 by the end of the year, that's this calendar year. So by the end of the year, anytime, even if it's December 31st, that's the age we want to put in, because remember our child tax credits change once they turn 17, so this is important. Child and dependent care credit, if you have it, great. If you don't, skip it. Same with the earned income credit. That's just going to be the number of kids. In this case, this couple does not qualify for earned income credit, so we can skip that. And really, most of this other stuff, foreign tax credits, educational credits, retirement savings, for most of you, we can ignore all of that, okay? If you're really getting into that level of detail, at that point you may want to talk to your accountant, but for most of you, we can skip this. And here we are. So with that setup, my expected withholding is $23,000. My expected obligation is $18,000. So I'm looking pretty good. I'm looking at a $5,000 refund. And then I can actually have it go ahead and pre-fill the W-4 out for me. And there you can see my W-4 has got it filled out as married filing jointly and just zeros. That is all there is to that one. And then for your spouse, there's also one for them. Okay, so that one worked out pretty well, but what if it doesn't look so good? Let's go back and change a couple pieces so you can see this. I'm going to go ahead and edit this. And I'm going to say my taxes per pay period are really only $200. And that so far, I've only got $1,500 withheld from this one job. And on my spouses, let's say her tax per period was also only $250, and she has only had $1,500 withheld as well. Now let's go ahead and go back through this thing. All the rest of it will stick, and that's what's kind of cool. You can play with this. Now it's going to recalculate, and oh no, we owe $6,000. Okay, and here we are on the second W-4, and you'll see what it did. What it's done is it's gone in here and said, okay, for the second job, let's go ahead and say we make an extra $15,000 and hold out an additional $219. So if I fill out my W-4, like the one we just saw a second ago with just zeros, and then I fill out her W-4, set it up like this and submit it, what will happen is if you take 219 times 26, right, that's $5,694. But what it's doing is it's telling them to calculate that I have an additional income of $15,000. And I'm going to guess we're probably in a 22% bracket there. So it's going ahead and telling them to go ahead and withhold on that so that it can make up for the fact that we are already two and a half months into the year. And so it will actually have your employer hold out additional to get us there. So this will actually take care of it. And then what I would recommend is, because we're doing it mid-year and we're making up for a shortfall, we would want to go ahead and then in January redo this so that we get rid of that additional $15,000, and that way we're not overpaid for next year. And of course, if you like refunds, so the goal of this is to try to get us to break even. But if you like refunds, what you can do is say, after you've done this, its goal is zero. That's what the estimator is trying to do, get you to zero. But if you like having a $3,000 refund and you get paid every 2 weeks, just take $3,000, divide it by 26. That's how much extra you want to have withheld. And then just go ahead and put that in the extra withholding, and that'll get you that cushion that you like. I know some people like to do that because of that's their vacation money, or that's their play money, or that's when they get to go buy a new TV, or whatever it is you want. It's none of my business, but I know some people like to have refunds. Me personally, I don't want them having my money any longer than they have to. Give them what they have coming, but no extra and no sooner. But that's just me. It's not necessarily wrong or right. It's what works for you. So hopefully that's helpful. And if it was, please go ahead and subscribe. We'll be doing more. I think one of the next ones will probably be some tax tips that you can do this year to try to make the tax return better for next year. And we will be talking to you soon.